Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-minis futures for the session of 13th of October. So in this video, I'm going to share with you the market recap from yesterday and also on Friday, and together with the trade reviews in the 3 minutes time frame, which I will include the entry, the exits, and also the rationale behind. And in the trade review section, I would like to focus on how I actually trade the trend reversal in conjunction with the descending wedge pattern by just simply paying attention to two key elements that will increase the winning rate. So do watch out for that. And subsequently, I will definitely cover my bias, the key levels that I'm watching, and also my trading plan for the session later. Alright? So let's get started. So we can see that we are in the daily chart of the S&P 500. So yesterday was very bullish, and on Friday we have another bullish day as well. So you can see that this today actually kind of as a continuation of the previous trend and going into the acceleration. And if you just take a look at this trend channel that I have just newly drawn. So previously, if you remember in my video, I have this little channel here, and I just adjusted my up channel into this channel and using this low from the September here. So very obvious, we have entering into another overbought of the up channel. So, but just look at how close we are from the all-time high level. So I just have a feeling that we probably can see an acceleration to the upside as well before we are having a long-awaited reaction. Anyway, I will just talk more on the market condition or market outlook in the later part of the video. But first of all, let me just get down to the hourly time frame. And let's talk about the market recap from yesterday and also on Friday as well. So you can see that yesterday definitely we have seen uptrend during the non-RTH session, and during the US session we have seen an acceleration to the upside, and this is one of the best rally session that we had for quite some time. And previously on Friday, which is on this session here, we have seen S&P 500 just keep grinding up. So if I just take a zoom out view, let me just take a zoom out view, you can see that prior to I think last Friday, I do have this up channel, and I do talk about we're potentially entering into the channel overbought, but you can see that the market did not really find any supply and on a Friday, and therefore I think we have seen the continuation. And also yesterday it just keep accelerating to the upside, but now actually we have seen supply pick up a little bit. Let me explain a bit more here. So you can see that especially with this 3 up candle, so this is a kind of a topping pattern, and in conjunction with the increasing of the supply level, especially on this 2 bar here. So we have seen the shortening of the upward thrust in conjunction with the increasing of the volume comparing to the previous day. So definitely there is presence of the supply, but it did not really shown up aggressively, and I think we only see this kind of the last hour profit taking bar, and also together with the spike of the supply as well, and eventually it just kind of hit into a bit of the acceleration to the upside, the profit. And when we have this kind of the shallow type of the consolidation as a reaction right now during the non-regular trading hours. Okay, so that's overall still relatively bullish. We haven't seen a lot of the threatening price action. Apart from some of the supply emerge in these few candles together with the shortening of the upward thrust. Okay, so let me get down to the 3 minutes chart, and I have a trade review, or I should say a potential trade review from last Friday, because I do think that it is a really nice trade that I would like to share with you, and how to actually trade this kind of the descending wedge pattern, because I do know that a lot of the traders trade the patterns, but unfortunately a lot of them also did not pay attention to the proper price structures together with the volume. And especially the volume, I would like to explain in a bit more detail in conjunction with the price action. But before I dive straight to the setup, let me give you a bit of the context here. So prior to the Friday session, we have a kind of a ramping up, and then followed by consolidation, horizontal type of the range. So it's quite natural that the price actually stops right at the 34.50 level, as pointed out in this purple line here. So this is the immediate resistance level, or just a few days ago. So I think it just hit the resistance level, and the price just hang around there for quite some time, waiting for the supply to emerge. And let's see what happened when the US session started. So here's the context. We have a kind of resistance level, or you can call it a support level if it's just above that. But anyway, this is the key level, 34.50, and we can see that there are quite a lot of the price interaction within the level. So definitely this is a valid level, or a good level to watch, because the price actually respecting the level. It's not just that I say that 34.50 is a round number, or is something from the previous high, but we can actually see how the price interact at this level. So definitely that's a valid level to pay attention to. So the descending wedge is marked up here. You can see that right before that, or I should say that right at the opening session, we have this kind of the rejection bar, and then followed by a reaction or a pullback. So this is a way of the market to test the level, but the way on how they test the level is via this descending wedge, which is a bullish sign in nature. Why I say that? Because first of all, we can see that this descending wedge, apart from the pattern itself, most importantly is the losing of the down momentum, or I should say the downward thrust is getting shorter. So you can see that not only the downward thrust, the down wave together with the progress to the downside is getting shorter and shorter. So this is evidence that the down momentum is fading. So we're losing the down momentum, but that doesn't necessarily mean that we definitely will see a kind of the strong reversal like we have witnessed here. So the key in trading the descending wedge is to judge the price character in conjunction with the volume. So let's just pay attention to these two aspects. So first of all, I would like you to pay attention on the volume session itself. We can see that this is a supply, and the supply is getting lesser and lesser while we're having this one push down. This is a second leg down, and this is a third leg down. So obviously the supply level has been decreasing, so we're losing the momentum and together with the supply level. So this is definitely an encouraging sign. And subsequently, just take a look at this rally. So this is one kind of the best rally that we have seen. So why do I say that? Let's take a closer look here. So we have this 4 consistent volume, and together with this bullish bar here. And especially in this this bar, as I pointed out right now, there's a effort to push the price down, but look at the results. So eventually we just have a demand tail and close at the middle of the range here. So this is definitely sign of the absorption where the demand come in at this bar, and subsequently the rally just kickstart. And you can see that this is a very consistent volume level. So unlike what we have seen in this Wedge, we have just 1, 2 up bar, and even this is only 1 up bar. So 2 up bar, 1 up bar, and this is the 4 up bar that break out from this descending wedge. So that is very meaningful, and that comes with consistent of the demand. So we can say that we have a descending wedge, which suggested that the losing of the down momentum, and subsequently the demand come in, started at this candle, the small candle, and then we have seen a consistent demand to kickstart the rally, and it's actually breaking out from this descending wedge. Okay, so this is the first part of the story. So subsequently, what I would like to see is some kind of the pullback, or as a test or backup action that is better than what I've seen in this wedge. So you can see that this tree reaction or the pullback is getting lower low, and we have seen this kind of the downward action, downward progress. So definitely this is still relatively bearish. So I'm waiting for this kind of the pullback. So this is considered as a pullback as a 1 bar, or you can just combine this 2 bar as a horizontal type of the pullback. If not, if this doesn't convince you, then you might want to wait a bit longer. So until here, so this is a rally, and then here is the pullback. So as a horizontal type of the consolidation, definitely is better than this kind of the reaction, or even the second, or even the third. So in terms of the magnitude, or in terms of the spread of the candle, definitely a lot bullish in terms of the pullback. So now we have one nice rally, which is better than anything that we have seen within this candle, within this descending wedge. And now we have this kind of the reaction or pullback, which is stronger or better than anything we have seen from this wedge here. So definitely this is the right place to go long. So I think that either the breakout trade, or even the early entry like this with the breakout type of trade, can be a nice long entry. So depending on how you manage the trade, I think you might be able to catch this spike of the bullish candle, or you might just want to trail the stop. Maybe you will get stopped out with this long tail here, or you can just wait, get stopped out until maybe this bearish bar. So no matter how you manage a trade, I'm sure this will be a winning trade. Alright, so this is the trade review for last Friday, and let me just drag down a bit to review the trade from yesterday. I wasn't trading, and I wasn't even looking at the market, so this is just some of the possible trades that I find that is interesting, so I would just like to point it out to you. So let me zoom out a bit to give you a bit more of the context. So yesterday, so here we have a very nice uptrend during the non-RTH, the Global session, and subsequently, if we just want to trade during the US session, I think there's definitely a few chance. So let me just zoom in a bit more. So in this case, I think in terms of the levels that we are pretty much close to the 3480, that's the resistance, or now become the support level. And you can see that there's price interaction around this level for quite a bit. So definitely we can rely on this structure alone. So that could be the structure that we can rely on. Maybe this kind of the routing. So we have the breakout, pullback, tested the resistance turn support, and then with another test, and then followed by the reversal. So this could be the reversal trade, or subsequently we have a breakout, consolidation, and then breaking out again. So this could be another kind of the breakout trade. So definitely depend on your trading strategy. Either the reversal or the breakout trade can be initiated, especially with this kind of the staircase setup, like this kind of consolidation, breakout, pullback, tested the resistance turn support, and then another structure, breakout, pullback. So it's a very nice type of the setup. All right. So you can see that yesterday we have a acceleration to the upside and touch the overbought of the channel here. So acceleration to the upside, shadow pullback, and especially in this case, so I pointed out that we have emerge of the supply. So that actually reflected in the price as well. So you can see that this is kind of a rising wedge pattern with the shortening of the trough to the upside. So definitely losing up the momentum to the upside and eventually have this kind of the breakout. But you can see that not much follow through to the downside. So if you trade it to the downside, maybe this could be your trade from here on. So that's pretty much based on the rising wedge pattern. So that's the rising wedge. Alright, so let me just get down to the hourly time frame and let's talk about the current market outlook or current market condition. So definitely we are just very close to the all-time high level. I think is 35.90 or 80 something, 86. So that's the all-time high level. And now after hitting the channel overbought here with the acceleration to the upside with a bit of the climatic action, here comes the reaction, or we're doing a pullback at the moment. So depending how the price react, you can see that I have marked up this immediate supporting level, which is kind of a small level, but definitely is still respecting this level so far. That's somewhere around 35.10 to 15. So if we can just turn up from here, then I think we have a higher chance to see S&P 500 to keep going up and maybe to test the previous high at around 35.90 before we just expect to see some kind of the correction or deeper pullback like this. So let's see how it goes. In terms of the trading plan for the session later, then definitely I'm still looking at this level, so 35.10 to 15, and yeah, so probably can have this kind of continuation to the upside, and this could be the supporting area. Otherwise, let's see how you actually react at the immediate resistance level at the swing high level here, 35.40. So there could be a potential short entry if we have some kind of the rejection with the increasing of the supply level. So let's see how it goes. But I think in terms of the overall structure, it's still very bullish. And definitely if we haven't seen a lot of the supply emerge in this case, it will just keep going up to test the all-time high level. This is the end of the video. If you like the video, just click like, and also do remember to watch the video that shows on the screen to find out how I actually trade the breakout strategy with high winning rate with this one simple yet effective strategy. Talk to you soon. Bye bye.